Good morning. All right, September 5th, and I don't think Costa will be joining us. I believe he's on vacation now. So let's get this started. All right. Starting with the daily chart, we can see we are approaching previous month 50% right here. And then tomorrow is NFP Friday for this month. So we will determine the longer term momentum based off of this line and based off of where we are in relationship of NFP Friday. Hopefully we don't get stuck in the middle of it like we have been for the last month, right? We pick a side, that way we can understand, are we looking for the low of the day or the high of the day? As of right now, we're between the 2.5 and the 5% on the weekly constant variable right here. So we can expect the possibility of a turnaround Thursday, or can accelerate it Thursday, right? Based off of what price has done so far, it should be this one right here. All right, so this is Tuesday's opening initial balance, or DR, 9:30 to 10:30. This is Sunday's 1800 hour, right? If we are going to put in, if yesterday, Wednesday, was the low of the week, then we're going to have to expect to see a turnaround Thursday for us to continue back up in here and to test some of this. But for now, like, nothing is pointing to that yet. So, morning. Right now, what we're waiting to see is, like I said on the daily chart, like, can we get below previous month 50%, and what's the relationship of NFP Friday's range? So we're kind of sitting on our hands. So we're starting to get somewhat overpriced in. Well, we're hitting the alert for overpricing to the downside, and it's only the first trading week of the month, which is somewhat alarming. All right, moving on. Market clues, right? There are none. We're like zigzagging between the previous day's midpoint, haven't taken out a high or a low, so there are none there. Now we're going to move on to our time-based probabilities. Good morning. Midnight 1800 and settlement for time base. I'm looking forward to in the future doing doing crude oil and gold next. Okay, as we can see, like, we have just been swiping all night between settlement, 1800 and midnight, which is a clear sign that the market's. Good morning, Jerry. Do you want to jump on, Jerry? I'll send you a link. If not, I get it. It's like 4 o'clock in the morning for you. I don't feel like talking. All right. So when you see price swiping back and forth like this between these 3 times, and these 3 times being close together, right? It's telling you a hint, right? Obviously, want to arrange a market over the Globex session, right? But it's also telling you that the market's waiting for something. I understand. And what is it waiting for? It's waiting for NFP Friday, and then I'm sure we got some kind of news catalyst today. ADP employment change, initial jobs claims, ISM service PMI. Yeah, so it's sitting on its hands. So like, there's no sense. There's, as of right now, for me, right? If we look at this, where does Globex start? Right? If you're an Asia-based trader who is trading statistics, your 1900 to 2000 hit, your 1930 to 2030 hit. Like you get double paydays last night. That doesn't happen every day, and that only happens on days where like the market's waiting on news and stuff. But there's absolutely nothing going on yet. So this is when it's even more important to identify, you know, when the obvious happens, right? And it's going to be, we can sit here and range like this until 8:30, and that'd be fine. And our job is just to be patient and, you know, wait for the obvious. If it's not obvious, we don't trade it, right? This is one of the biggest things that, like, I have a lot of respect for, like FX for a living. You know, he's an ICT based trader who trades, you know, every time he trades a specific scenario where once, you know, a high or a low gets taken out, right? And he just doesn't trade every single high and low. He wants to see obvious destruction, obvious extremes, right, being taken out, right? And I have a lot of respect for that because, like, if it's obvious, like yesterday is a perfect example of it. Let me jump over to the 1 minute, right? Let's go over here. Let me put this on the 1 minute chart, right? I want to show you guys something, right? What do I mean by obvious, right? So yesterday, this was right before the JOLTS job number, right? And at that point, get back over here, trading view, right? 6:30, 7:05. It's had a 79% probability of being hit. $7.50, 76. 9:30 had a 56, I believe. Nope, 35%. So, and then 258. This had like an 82% probability of being hit, right? So you had all these probabilities that would be a hit, and like at 10 o'clock, it was like, we're just going to disrespect these probabilities today, and that be that, right? And this is what I mean by obvious, right? The news comes out, the Jolt 10 o'clock news, we come out and we wipe out these probabilities, right? But this is what obvious means. Like, this is a 1 minute candle that had 141 handles on the NQ. 1 minute, right? 141 handles on the NQ, right? And I want to ask the audience, is this candle, the news candle, the obvious, or is what happens afterwards the obvious? One, two, three, four, five, six, seven, 8. 8 minutes after that news candle, we recovered the whole 141 points. Which one's the obvious? Like, when I mean obvious, what is the market telling us right here? Like, that we dropped 141 handles and we recovered that 141 in 8 minutes. What is the mindset? What decisions? What generated clue is the market telling you here? Yes, what happened afterwards is the obvious. Eric, JYPC, yeah, exactly, right? Because if this was obvious, if the news candle was the obvious one, this should not have recovered as speedy as it did, right? So right now, when you see that this was just a inventory correction, right? And the fact that we came up here, our mindset should be based around going long into this. This is what obvious looks like. This is what destruction looks like, right? Obvious destruction, I guess you could call it. I don't know. I don't have words for these things. I just see them, right? Right now, the obvious is that we're in a range of market overnight, right? So if using these 5-9 boxes in the hour indicator, you need to be in the mindset of, I'm a range-based trader until something obvious happens that makes the market show its hand, right? So we've got our time-based statistics, the 1800 settlement and midnight on, and we can see the obvious is that we are in a ranging market swiping back and forth, showing that the market isn't showing its hand yet. So now we're going to start getting structure-based probabilities, right? We're going to grab this news candle, we're going to grab the high, right? So what we're going to do is we're going to turn on the vet. Get rid of the stuff we don't need for now. All right. It is Thursday. Whew, thank God. It's been a hell of a week for me. I have a word for it. Buy the fuckery candle. We know about the fuckery candle, Jerry. All right. So now we're gonna do. We're gonna do structure-based probabilities. We can do either the flout from 1545 to 1645, right, to cover this whole area, and we'll pull the standard deviations from that. Or we can do the 1930 to 2030, whatever range you decide to do, right? Jonathan, are you in the house? Jonathan's in the house. I'll do the flout for him. He's in the house. Good grief, Jonathan. You're the man, dude. All right, so 1545, 1645. All right. So now we want to get this low and this high, right? Which is anchored off of the flout. So we know that we need to do 1.5. 1.5. Let's see what that. Nope, that's not going to work. Let's go 0.8. It glitched out. Said it's not doing 0.8. You're stupid. Let's do 1. Yeah, it's not. Let's see. 1, 2, 3. This is set to Thursday. Oh, Thursday hasn't happened yet. This has to be on Wednesday for yesterday's spot. There we go. I knew I was doing something stupid. Okay, so this is between, this high is between the 2 to the 3. So what we're going to do is go 2.5. No, 0.5. Let's go a little bit higher. 2.6. 2.7. All right, 2.7 it is for this high. So yesterday's high, and what is the probability of it hitting? So 19,111, and it has a 74% probability. And yes, it falls within the average daily range, and it falls within the weekly range. So that's a realistic target to hit. Now we're going to do yesterday's low, right? So we go back to the vet, and we're going to do 2.5. All right, so it's not quite there. Let's go to 2.4. Close enough. It has a 59% chance of being hit. $18,825 with 59%, and it falls out. This 2.5, 2.4, yesterday's low, does not fall within the average weekly range within the last 8 weeks. What does that mean? That means the calculations of these average daily range and weekly ranges. I hide all drawings. Here's my weekly. So we're below our weekly range as is, right? So these two red lines calculated the last 8 weeks and said this is based off of the last 8 weeks, this is where we can project the average weekly range to be, and we're outside of that right now, which is an indication that we might want to do a turnaround Thursday, right? All right, so now that we've done that, we have our time-based structure on, which is the midnight settlement in 1800. We have our structure-based probability, our time-based probability is on. We have our structure-based probabilities on, right? And now we're going to do our projection-based probabilities. So this is where the additional database comes in, which I was talking with the CEO of Edgeful yesterday, and he has a pretty good idea of how to do what I want, but I don't think I'm going to use him because it's not free. All right, so we're going to do this is where the DR traders come in, right? Going to the 5-minute chart. Like you can either use M7's drive or you can use the one setup for life. But basically, all we're trying to do is take the variables from Asia, from the 1930 to 2030, and the London 3 to 4. If you're an ICT-based trader, you can use the flout from, I think you guys use 1500 to 2000 for the central bank Dillon range. If you're an ICT-based trade, I think you guys use the 2 to 4 for a kill zone, or 2 to 5. Whatever time frame you decide to define Asia, and whatever time frame you design for London, those have probabilities of projecting what New York's going to do, right? So right here, I use DR because I've collected all the data, and there's the most data towards it, right? We can see from 1930 to 2030, we went long, and then DR goes until 02, and by 02, right, we hit the other side of the range, which makes it a false day. So within my database, I will put Asia long false, right? We've already talked extensively about what these mean. Like if London is above this, there's a couple of scenarios that can happen. London can be like this, where it's taking out Asia's initial balance high from 2 to 3. It can be above the midline, or it can be above Asia like this, or it can be where you take out the low. It can be below the midline of Asia, or it can be completely below, or it can be London can be inside of Asia, or London can be engulfing Asia. Right now, what we see, and I don't use any of these for my filtering process because it takes unnecessary data sets out of my rep. I care about what the price did around that initial balance, not what the next range did. However, there are 2 cases where I will filter based off of that. Tonight, London from 2 to 3 hit both sides of Asia. So that's one case, and then because it's a rare thing in the NASDAQ. The second one that I'll always filter is if it's inside of the Asia, right? But if it's like upside X plus, or downside X plus, I won't incorporate that into my filtering process. So far, the 2 to 3 o'clock engulfed the 1930 to 2030 range, so I will filter based off of that. And then what have we done afterwards? Price hasn't given us absolutely anything to work with, right? So right now, we're going to put the Asia went long and then broke the DR balance, DR range for Asia, and that London engulfed both sides of Asia, right? And we can't say they went long or short from the 2 to 3 o'clock range because it hasn't done either one, right? And this is why, like, if you have the ability to do this later in the day, like 8 o'clock in the morning, is probably better. Nice, Costa. Costa's on vacay. Him and Jerry are meeting up in Ireland. I'm just kidding. They're not. All right. So now that we have what Asia's done, what London's done, now we can put probabilities on it and get our projection-based probabilities, right? So now that we've got, and I'm repeating myself because I know somebody's out there, I hope, is taking notes and building a system. So I want to be a little bit more clear in these shows of what I'm doing so that you, the viewer, can actually start building your own workflow process. It doesn't have to be exactly like mine, but I'm just trying to be an example, right? So the positive 1, this right here, number 1, out of 4,280 days, right? The filters of what Asia's done versus what London has done has only happened 4 other times, right? So if we know that, before we get into our projection-based probabilities, we know that we can take those 4 other days and we can look them up just to see how it played out, right? So we're going to type in NQH 2020 and hit enter. Even though it says no symbols match your criteria, it still works, right? And then we're going to go to our date finder right here, and we're going to type in 2020 01 2, motherfucker. Number 1, let me turn that off. Number 2, let me fix this. All right, so we're going to go to 2020 01 23, right? And we're going to go to that time in the range. So 2023. So let's put on, you can put on your DR script. Or if you use kill zones from the ICT world, like put on your ICT kill zone. This is one of the days that it actually happened, right? And you can see that obvious happened, it came down, wiped out the low, and then ended the day high, right? So this is one scenario that has the same variables that Asia did, that we're seeing that Asia did in relationship to London, and this is how it played out in the past, right? So we're going to take a screenshot of this. This is looking at the playbook before going into the game. And we're going to put this in our article today. New post. All right, now we're going to go to the next one, which is in QU 2021. This is why having a database is so cool, because you can actually reference like the days where something similar happened, and you can start mentally preparing yourself for what to look for. And like when you see certain times, why is this not working? NQU 2021, enter. Oh, maybe it's because I'm in replay mode. There we go. And then, but when you have your own data points, right, you can do stuff like this, where you can sit there and do prep drills by looking at all the data that had the similar variables that you're dealing with that day. So we can see that the last one we looked at happened on a Thursday. Well, no, not contraction. 1 minute, I need to fix this. I selected the wrong thing. I select contraction when it's actually range X. Sorry, I just jacked that up. All right, so correction. Out of 4,280 days, what we saw happen today were, I was like, that's weird, where London engulfed Asia, Asia went long and then had a false day. That's happened 96 other times, right? So let's look at let's look at the most recent ones. Last time that happened was in April of 2024. Sorry about that. And then we're going to go to 0408. So this is what that looks like. This is the kind of day that looked like the last time we did this in April. Right? Now I know Jonathan can see the repeating structure. Where we come down to go, we go up to go down, we go up to go down, we go up to go down, we go up to go down. So like it was definitely not a trending day. Right? Is this making sense or am I confusing? Because I know I made a mistake and that last part was, all right, this is the 8th, right? If this isn't making sense and I need to re-explain, I don't mind to. The next time that happened was the 2nd of the same month. So let's go over to the 2nd, right? Look, you have Asia, it went long, ended false, and then London engulfed both sides. And then we had this massive sell-off that started at 5:45 that went all the way until 10:30. So we need to select this. So these are the complete polar opposites of what we've seen so far. But there is a clue that I want to point out after we do like one more. Let's go to 2023, December. Let's do 1 in 22, NQM 2022. Hit enter, right? And this one's on a Thursday. Let's go to our dates and let's type in the date that we're looking for, 2022 0526, and we can see the same phenomenon happened. Asia went long, broke outside the range, London engulfed both sides, and then, you know, like at the 9:30, we ripped higher, right? I think that caught it. Yep. All right. So what this is telling us is that the midpoint of that London is going to be important, whether we use, so this was the first one, right? This is actually what the structure looks like right now that we're dealing with. So this is what a consolidation looks like, right? The key here is that we keep swiping back and forth that London midline, which is this black line right here. And then New York swipes below, and then we swipe back up above it. and then we just die off, right? We don't set a trend, right? This is what the trending ones look like, right? We get below the midpoint and then we start the trend. Our hourly boxes and 5-9 boxes will indicate if this is happening. This is if we go long. Right now, I'll tell you that out of those 96 days, right, there's a 27% chance that the 9:30 to 10:30 is bullish. There's a 50% chance that after 10:30 we stay in a long position. There's a 42% chance that we're short, and then there's a 21% chance that we engulf New York, right? So with that being said, now we have a clue. We've seen what all 3 types of days did based off of what Asia and London did. And now our job is to go on and continue to identify, if my chart will let me go back, identify where our lines in that same, where our decision points are going to be made, right? So looking at this, and then one more time, I'm going to put this right beside of it. Right, you can see how a big swing up to end down, big swing up to end down to go back up. That happened on this day. Big swing up to head back down. So if we're going to follow suit on this one, right, we need to step above that London midline and go and find support within this London range. All right, this one we know has the least likelihood of happening because what did we do in London? We went down to go up, right? So we're kind of doing the reverse effect of that right now. And this one, we went up to go down, we broke the range, and then we consolidated. So by, 7 o'clock, we should have a pretty good feel on which one of these 3 that the market wants to play with. I don't know. I don't have that, Eric. I don't have that. I'll give you the dates. You can go back and look. I just don't feel like going back and looking, but that's actually a good idea. He asked, wondering where Sunday opening was on those trend days. You got to realize that the only one. Okay, so let's look at this. Let's look at the days that those happened, because that will define the weekly profile. So the first one happened on a Monday. Tuesday was the second one. So those happened earlier in the week. The last one we looked at where it went long, right, this one right here, let me pull it back over. So this one happened on a Monday. This one happened on a Tuesday. This one happened on a Thursday. And if you look to the left, right, you can see this was a turnaround Thursday. So the market was selling off, and then we had a turnaround on Thursday, right? Like this is like, let's pretend like this was a Thursday and we were below, right? And the week was selling off. This is what an acceleration Thursday looks like, right? But this is out of the small sample set that we checked out. This actually has the highest probable out of the 96, right? Because remember we said upside had 27 plus 9 plus 4, so what is that, 36, 40? 40% of the time, this New York stayed above this London low, and we went long after 10:30, right? This has the highest probable one, and this one actually happened on a Thursday as well. So the key points for us to pay attention to, right, is going to be, this midline, this London OU line right here. And we're going to see where the 4 o'clock candle syncs with that. The 4 o'clock's up here. So yeah, we'll just use this midline of London. To make decisions from. All right. So now we have, what happened to my, oh yeah. So now we have our time base, right, which is settlement 1800 and midnight. We have our structure base probabilities, which is yesterday's high and yesterday's low. And now based off of what the Asia and London did, we're going to do a projection-based probabilities. All right. And we can see this first standard deviation from Asia has a 97% probability. 97. Right? This 2.5 up here has an 82. Good morning, Bowie. Or afternoon, whatever it is for you. This 5 has a 64. Let's go down to the lower ones. This 2.5, actually, we will wait because I want to do my average daily range first before I grab any more probabilities. So now we're going to go back to the vet. We're going to turn on our average daily range. And once I start, good morning, Odina. Just made it from the gym. Yeah, like I'm just going over my process, the same workflow process I do. I encourage you to definitely start from the beginning because we covered some pretty good stuff in the beginning. Turning back on the vet. For some reason it's not coming on. Maybe it's because this is on a 15-minute. There we go. All right, so we can see that our average daily range over the last 10 days is 394. Out of 394, out of those 10 days, the high was hit 39% of the time, the low was hit 36% of the time, right? So now we're going to draw out our average 10-day range, 394. Just like that. And it lines up with this scenario right here, right? However, this is saying that this is a news day where we plan on taking out both sides of the range of previous day, right? Which could. But now I look at this 64% probability up here within Tuesday's range, and then I look at this 59% probability, and then I think, when I look at my database, what it tells me that New York has 27 plus 9 plus 4, so 36, 40, a 40% probability of being above London's low, which means my 9:30 at 10:30 has 40% probability of being like this, or like this, right? I'm not going to ignore that, right? because that's 40%. This, where we take out London's low and stay below London's high, or the mid, or below like this, only has a 16 plus 10, 26, 26, 36% probability. And then the chances of us engulfing, right, has a 21% chance. So the 9:30, 10:30 would look like this in relationship to Asia or London, right? So it's still pretty 27, 16. Oh my God, I'm an idiot. 27, 16. No, that's right. 27 plus 9 plus 4, that's 40. 16 plus 10 plus 10, that's 36. So it's flat versus, it can go either way, is what I'm seeing, right? So we're not even going to put the 9:30 to 10:30 on because it's not obvious, and it's going to skew your mindset when you're actually trading live. Like if the 9:30 and 10:30 can go either way, up or down, like keep it off your chart. It's better to keep it off your chart, because if you put it on your chart, you're going to skew your mindset and you're going to expect to see that, and you're going to get this bias, right? And the thing statistics is not supposed to do is give you a bias. It's supposed to give you a statistical bias, but when the statistics are flat based off of the variables, keep it off your chart and let live price tell you what it's going to do, right? So now we're going to go into our distributions, right? So if this is 394, the average 10-day range, we want to see what the 4 to 8, the 8 to 12, the 12 to 16 looks like using the last 15 days, because 15 weeks, right? We can see that it being Thursday, 4 to 8 moved 41%, 0.41%. So like this. We've already met that criteria. We actually overextended that criteria just by a little. We can see, let me put this back on. We can see 12 or 8 to 1600 did 1.51%. So we know that most of the move today is going to happen between 1%, and then we have 12 to 16, which moved 1%, 1.2. So now looking at this, right, looking at our average 10-day range and looking at our quarterly distributions, they don't line up, right? So either we're going to have a fun swinging choppy day, or one of these are going to get disrespected, whether it be the distributions or it be the average 10-day range, right? We look at the VET and the distributions on, let's say, a minute chart. And we pull less data, right? We can see that Thursdays in the past are still extreme. 0.44 over the last 4 Thursdays, 1.74 from 8 to 12 over the last 3 Thursdays, 1.24 over the last 3. So getting a more local view of it doesn't help at all. It actually adds more volatility. So we need to keep that in the back of our mindset, that this is a possibility of us actually reaching up into the twos if we decide to step above this London OU line and find support. This is definitely a possibility of getting back up into Tuesday's range by the end of the day, right? So it would be like this would be like this. We know from 8 to 12, we have this midnight retracement, which midnight's down here. So we can sync the 8 to 12 right around there. Push this out to 12. Right there. And then here's the thing, just like I said on Monday, right? Like we need to pay attention to that New York midline from 9:30 to 10:30, even as this happening. Can price get above it? Can price get below it? You should be drawing it out on your chart as it's happening, right? As the 9:30 is playing out, take a box, draw it out as it's developing, and pay attention to that midline, right? And are we above it or below it, right? Like that will give you a good indication of where these distros are going, and then you can do the same thing in the afternoon. So because after 10:30 we have 50% probability of going long versus 40% probability of going short, this would be the higher probability play. What is going on with my trading view? Like it's completely cut off the times and everything. That's annoying. So we're gonna, before we do anything else, we're gonna put in a couple of downside targets based off of what Asia and London did to see if that side gets, what's the probability of that getting hit? Like, cause we can still go down. Like the highest probable trade is to the upside, but the downside has a 40% chance over a 50% chance. So we're gonna still factor that in. So based off of what Asia did in relationship to New York, London did in relationship to Asia, this 2.5 has an 80. This 5 has a 60% probability. Right, and then that says we have targets to the downside if we decide to take out the low and continue heading lower. And if we start doing an acceleration Thursday and not a turnaround Thursday, it's a realistic view to look at this 18,706 of getting hit, right? What's going to be our line in the sand for that? It's going to be this London OU line. Remember I said this London OU line until the 9:30 to 10:30 midline is developed is our anchor to say, hey, if we're below it, we target the lower targets. If we're above it, we target the higher targets. Does that make sense? Have I confused the shit out of all of you guys? Because that was my job. That's my goal, is to confuse the shit out of you. This is what it feels like on days where the market hasn't shown its hand, right? You're going to not be as confident as you usually are, but that's a good thing. That means you should wait and display patience, or you should just mechanically trade only. Future Millionaire, when you mention midline, is this the MNO or the halfway of the 930? What is MNO? I don't know what MNO means. Pickle, he made it. When you mention midline, is this the midnight open? No, not midnight open. When I say the midline, like right now, our OU line is the London, right? That is the middle point between 3 and 4 o'clock's range. Now, if 4 o'clock was closer to the middle line, that would be beneficial for us because we would have the 4 o'clock probability anchored to that midline, right? But because the 4 o'clock in London is all the way up here, we put this on here as the midline. It's synced around at 3 o'clock. But anyway, what we're saying is price needs to step above this middle line of the 3 to 4 o'clock range and go. I'm using that as an anchor point. right? So when 9:30 to 10:30 develops, like as it's developing, right, I'm going to be paying attention to, nope, not going to do that. Let's make this obnoxious. Just like this. Let's go to our live price chart and copy. Because if we're expecting this kind of day, right, but to the upside, that's what probabilities, it's not going to be extremely bullish like this. But if we're expecting this, and this is a good exercise to go over, because this will tell you, are you heading into a chop day or are you heading into a trend day on the open, right? Let's roll out our 9:30 to 10:30. So from here to here, 9:30 is right there, right? So the midline currently is here, and as price develops the 9:30 to 10:30, I'm paying attention. I'm dragging this box with it, paying attention. Can price get back above here, or is it just targeting lower targets, right? You tested it right here and rejected it. And I'm just rolling it out, right? Because we can't even get back above that, in my mind, I'm thinking trend day, along with what the 5-9 box in the previous hour mid is telling me. We're going to do it for yesterday as well, so you can see the two variables. So this is the 10:30 right here. So at no point during this 9:30 to 10:30 range could we made it above this midline. So my job, and then we can't make it above the previous hour midpoint, can't make it above the 5-9 boxes. My job is to sit here and sell this market. All right, so let's do yesterday real quick so you guys can see the difference. That was what a trend day looks like off the opening range. This is what, and then we'll do it on this. Same thing. This is our 9:30. Within the first minute, right? This is the first minute, this is the second minute. The second minute literally breached the midline, right? So that's like, giving you clues, right? We continue going up, and we continue to breach this midline of the 9:30 to 10:30, right? And this is our range. What do we notice on the midline on the trend day? We never even came close to it. It's not, and this is moving more extreme than that trend day was. Like, remember the 9:30 to 10:30 on the trend day was just moving slowly, like it wasn't doing these big swings yet. This one's doing big swings, and this one's violating this midline multiple times within the first 5 minutes. And we're above the midline, so we're looking for higher targets or higher probabilities. And what do? We violate the crap out of the midline. And we already talked about this scenario and what it was targeting and this extreme. We talked about it in the beginning of the video. So now we violated the midline from 9:30 to 10:30 multiple times, right? Showing us that the possibility of a trend day is very slim to none, right? Remember, I show you guys this chart all the time. Like, this is the 9 o'clock to the 10 o'clock. We're either going to trend or we're going to do V shapes or upside down V's. Like, we're either going to trend or we're going to do upside down V's. We're either going to consolidate, we're going to trend and then consolidate for the afternoon, Your job is to identify the 9 to the 1600, because I know most of my viewers are New York traders. This is your job, and that's the first clue. That 930 to 1030 midline and it staying solid is your first clue to understanding if you're going to get a day like this, or you're going to get a day like this where it just V shapes all over the place. You're going to get a day like this, or you're going to get a day like this where it pukes all over itself. You're going to get a day like this where it trends, or you're going to get a day where it's tighter consolidation and V shaping. You're going to get a day like this where it's trending, or you're going to get a day where it V shapes, pukes all over itself. You're going to get a day like this where it V shapes, pukes all over itself, or you're going to get a day like this where it trends. Your job as the trader is the number one, take your highest probable trade, which is based off of probabilities in the overnight, your time-based probabilities, your structure-based probabilities, and your projection-based probabilities, and to determine which ones in your average ranges and your distribution ranges, and then the midlines of London and the 930 to 1030 to tell you, give you clues if this is going to be a trend day, and then the hourly box is the live price component of it, right? The most important one to tell you, are you going to have a trend day for the New York session, or are you going to have a V-shape puking all over itself, right? And then you adjust your risk profile to that, right? So that's the whole purpose of it. Does that make sense? So basically, it's the 50% of that range as it's happening, future millionaire. Like you're dragging it as it happens, and that 1030 is a static line, and it's the midpoint of the 930 to 1030 range. But as the 930 and 1030 is playing out, you're drawing the box to see, all right, we're violating the midpoint. Violating the midpoint. The probability of us having a V-shaped puke 930 to 1600 is more likely. If it's not violating the midpoint, the likelihood of us having a trend 930 to 1600 is more likely. Now, where is the probabilities that I plan it during these calls? Like, which one's it targeting? All right, viewers, like we've talked about a lot of stuff so far, and I feel like I've probably just confused the ever-loving crap out of all of you guys. So please ask any questions. Like, I've got to assume that like you guys all are brand new and none of this makes sense. So if anything doesn't make sense, please ask it. Because my intent here is to make you go to workflow process and be able to make proper decisions during the proper time of the day, not to confuse you and get you more confused with your workflow process that you're already doing. So if this was helpful, let me know. If it was confusing, let me know. As you guys pick up the basic workflow process of what I do every single day with this system, like I'll go into more advanced stuff, but like I need to know that the viewer is not getting ultimately set back, but they're actually learning, and this is helpful because I don't want to move on to more complex stuff if like you guys don't even have the time-based, structure-based, projection-based, and the ranges down yet, and you don't understand how to synchronize Asia with London, London with New York from a probability standpoint. So our goal is wait for 50% midline after 1030 to get trend or range. While it's happening, future millionaire, like so at 940, have we violated the current 930 and 940 midline? 950, have we violated the midline? Like it's a clue, right? There's no goals to this, right? Your trade style should be based off of a mechanical system that you back tested, right? This is just telling you, like, is the market setting up for your trades to be higher probability? And then what kind of market condition are you in? Are you in that reversal followed by a range 930 to 1600? Or are you in the reversal happened pre-market between 8 and 930, and now you're doing the trend for the rest of the day, right? And then you position size like we've always talked about, right? Like you engage 10 micros and you don't throw them all at once unless you're in a range. And then like if you're in a trend, you just continue adding at the 5-9 box based off of where we are in relationship to the previous hour mid. I wish you didn't work at this time of the day because I would have you come on here and do this so I can make sure that you're what's the best way to track live the 9:30 to 10:30, just like I showed you with a box. I don't know. I use a box. Well, I actually use my DR script, but like you can use a box just fine. Oh, the Nanos. Like I want you to rewatch because I know like the pack trade group members started coming in around 6:10, 6:20. I want you guys to watch the whole one, and then if you're confused on how to use the 5/9 boxes, please, go back to yesterday's video. I go very in detail of how I align live price, which is this screen, my black screen, with the highest probable trade, which is my right screen. All right, if nothing, we are approaching, let me delete this. We are approaching, which if it makes sense, you should probably color your over underlines, right? A different color on the chart, like something obnoxious like Barbie doll pink. So you can see as you're approaching it, you know that that's a decision point. So far, we've hit the London OU line, right? And this is on the 1 minute. This should be on the 5 minute, right? And we're rejecting it, right? We're looking for it to step above and find support, right? And then we're going to start trading towards the higher targets. Other than that, I got nothing else. I got to jump. Nice, nice. There's a trading view indicator called initial balance by Noop Noop. Guys, you guys should take pride in your actual name. Noop Noop. Like your last name has your family values and character associated. Your legacy is in your last name. Like use your last name. Use your name. Don't go by names like Noop Noop. What the? Okay, like I feel like I'm dealing with a bunch of elementary schoolers who are just like naming themselves Noop Noop. Yeah, like OOK says that there's an initial balance. You know what? I'm not even promoting that because of his name, Noop Noop. Like no, whatever you do, do not use the initial balance by Noop Noop until he actually uses his real name. It's ridiculous. But that tracks the live price. All right, Jeremy. Have a good one. All right, guys. Have a good one. Thanks for attending.